Okay, Assalamu alaikum. My name is Shoeb Sharieff, and I'm with IjaraCDC, Community Development Corporation. And I'm here today to talk to you about Halal Crypto Investing. I think pretty much everybody here has heard about Bitcoin and Ether and all of the Dodge coins and so on. And the big question that a lot of people have is investing in crypto halal. And so I wanted to talk to you a little bit about whether or not investing in crypto is halal, and also to talk to you about ethical finance, which is also based upon blockchain technology. Now, because we're a small group, just stop me as I go if you have questions. But hopefully, I'm going to run through most of this really quickly so that we have lots of time for questions at the end. Is that fair enough? Okay. So first of all, let me give you an idea of who Ijara is. IjaraCDC is Ijara Community Development Corporation. Okay. We're not a bank and we're not a broker. We're a structuring company. What we do is we work with institutions that want to do Islamic finance, they just don't know how to do it, and we provide them intellectual property, the documentation, the process, to be able to facilitate Islamic finance transactions. Now, we're not the first company to be able to offer Islamic finance in North America, but we are the first company to offer Sharia compliant solutions in all 50 states. We're also the first company to be able to offer commercial and non-profit financing, schools, masjids, community centers in all 50 states. And we're also the only company that is able to do Sharia compliant SBA-backed transactions. In other words, SBA, Small Business Administration, which is a division of the federal government, which supports small businesses. And we're also the only entity operating at our scale that's actually a 501c3 nonprofit. And we've been operating in Canada since 2008. So we've been around for a while. Our Sharia authenticity, and I'm just going to skip through this, most of this information is available on our website, but our product goes all the way back to 1995, and it's been updated along the way, and it's currently being updated as we speak. So we'll have an updated platform coming out, inshallah, by the end of the year. So let's talk about, is crypto halal? And maybe you've probably heard very different opinions. Crypto is not halal, crypto is halal, it's not based on anything, so it can't be halal. And really what it boils down to is that cryptocurrency is no different than, for example, the US dollar. The US dollar is not based upon gold anymore, is it? It's a loan from the treasury, right? So what is actually backing the US dollar? Well, it's just basically the credit, full-faith credit of the US government. That's what's backing the US dollar. Now, the difference between a dollar and a cryptocurrency is that a dollar you can actually go to the bank and you can withdraw physical dollars, right? You can't do that in cryptocurrency. But you can use cryptocurrency as a means of exchange, right? I can trade you Bitcoin, for example, or various other coins or tokens for certain services. For example, real estate has been a subject that it's in the forefront of most people's minds because people want to be able to buy hard assets with digital currencies. So the most famous, of course, is Bitcoin, and then there's also Ethereum. Ethereum is also known as Ether. Okay. Now, Bitcoin, think about Bitcoin as a store of value. Okay. Effectively, think of it as having like a way to save. Okay. And Ethereum is more of an exchange. Right? It's a way to, it's like having a checkbook. Most financial operations today in the crypto space are built on Ethereum. Because Ethereum has what's called smart contracts. And smart contracts are basically contracts that will execute automatically once certain conditions are achieved. So most financial transactions today are being built on the Ethereum network. Okay, there's coins or exchanges such as Nexo, for example, which is peer-to-peer lending. Now, peer-to-peer lending is not asset-based, so obviously it's not Sharia compliant, right? So coins such as a Dogecoin or Shibu are just memes, right? They're not really based on anything. And because they're not based on anything, they don't really serve a value, they're not considered to be Sharia compliant. But you have other coins out there that actually do serve a function. There's a coin out there called Travel, for example, where you can book and pay for travel utilizing their currency. Okay? Bitcoin is also tradable for certain things, right? You can use it as a currency. Ethereum is tradable. Now, there's certain ways that if you utilize these crypto assets for something that is actually tradable, okay, something that's based on a social responsibility, for example, something that's accountable, then it is halal. Okay, and the common consensus is that Bitcoin and Ethereum and some other tokens are halal, but other tokens such as, and I'll go back to using Dogecoin and also Shibu, are not halal, right? So you have to really understand what is the basis and what is the function that this token or coin is serving. Now, there's also a new terminology, which I'm sure most of you are familiar with or heard, which is called DeFi, which stands for decentralized finance. Okay? Decentralized finance means that there's no central body, which also means that if you were to lose your account information, for example, you can't just walk into the bank and show your ID and other identifying information and they can recover your assets, right? Because there's no central authority that's storing that information. So that has its pluses and minuses. One of the pluses is that you can operate independently, you're unregulated. You can do certain things like peer lending. You can do NFTs, which are non-fungible tokens, for example. We've heard about NFTs in the art world, people buying and selling art, utilizing an NFT. There's a new NFT project for buying partial ownership of exotic vehicles, for example. So all these are different types of investment. But the drawback to having something that's decentralized is that you're 100% responsible for keeping track of your own currencies, your own wallet, your own investments. Okay? So you have to have some mechanism by where you can safely keep that information. Now, we've developed ethical token, ETHI, Ether or Ethereum is ETH. We've registered ETHI or ethical. And ethical token is a finance token. Okay? This is where we can utilize this token to finance a real estate purchase transaction. And then we've also developed the IjaraCDC token or an IJA token, which represents equity that you can build in the owning of a property. Okay? And I'll go into these a little bit more, but in the crypto world, there's what's called staking. And staking is a way to earn a return on your asset, right? Not just buying the asset for possible appreciation, but to be able to invest it. And it's effectively like putting your money into a CD. You effectively take your currency, you tie it up for a period of time, and you earn a return on it. Now, there are currencies out there that effectively pay you an interest rate. Obviously, those are not permitted. But there are also currencies out there that pay you a profit share or a distribution based upon the profitability of the project that's involved in. There's over 4,000 different tokens and coins out there. So you have to really do your research to find out, which ones are halal and which ones are not. Now you can go to our website. There's a list of about 160 tokens that are considered to be halal that you can review and research on your own. I'm not going to go into obviously all of them here, but the thing about staking is that you can establish different types of staking pools, okay, so that people can invest in different types of things. One of the things that we're really focused on is what we're calling Islamic philanthropy. Okay? And Islamic philanthropy is where you can invest in a real estate basically that's producing an income, and you can donate your profits to the nonprofit or a masjid or community center while you still retain that asset and any possible appreciation of that asset. Does that make sense? So Islamic philanthropy is so we understand, because we're a nonprofit also, we understand that everybody at some point in time reaches, maybe not the right word for it, but donor fatigue. Right? Not that you're tired of investing, but that donating, but you can't possibly donate, right? You've got so many organizations coming to you asking for donations, it's hard to continue to donate all the time. So what a lot of people will do is do a Qard al-Hasan. Right? Qard al-Hasan is where you effectively make a loan, no interest loan, to an organization where you would hopefully get those funds back after a period of time. Now, we see a lot of community organizations coming to us wanting to finance or refinance a property because they have Qard al-Hasan that need to repay, right? So by having these staking pools, you can effectively create what we call flexible endowments, okay? So you can invest using your crypto assets, take the cash flow profit and donate it to your organization, but you still retain that. So whenever a need arises, you can simply sell your asset anytime you want to, right? It's flexible. It's great. Does that make sense? So rather than donating $50,000 to your community organization and waiting for it to get paid back in a few years, you can immediately liquidate it whenever you have a need. Okay? That's what we're calling flexible endowments. And this is a mechanism that comes out of this concept of staking, which is in the crypto space, basically the same thing as doing a CD, for example. You tie up your asset, it's invested in something, it generates return. In this case, it's generated by rental real estate. Now we have a couple of pools that we've proposed. One is at the UNHCR, which is UNHCR, if you're not familiar, is the United Nations High Commission for Refugees, right? So we know that there's a lot of people coming into North America right now that are refugees and they need housing. So we can help provide housing, and the profits from that housing can go to the UNHCR. However, the investors, which are the FB token holders, can continue to keep their investments liquid. They can buy them, they can sell them, they can gain an appreciation possible, right? We're also proposing FB education, which is to be able to take the profits and be able to distribute them to schools and colleges and so on. So we've got, and there's other nonprofits that are out there that are operating that could probably benefit from having a staking pool where you can have a flexible endowment so that people can put money aside and invest and can save for long-term retirement or education for their kids and still be able to support their favorite nonprofit. So let's talk about why somebody should hold an ethic token, right? An ethic token or an ethical token, you have potential growth, right? Like any other investment, you can buy a small piece of a pool of real estate assets, right? If you were to get together and pool your assets with a group of people and buy one home, for example, your risk would be associated with what happens to that one home. But if you own a small piece of 100 homes, then your risk is divided amongst 100 homes, right? And there could possibly be some appreciation with some of the growth. And you have the power to decide, okay? In the crypto space, there's something that's called governance. And governance is where the actual token holders, or the stakeholders, can vote. So you can actually vote on something that could be a new direction for the project, it could be an addition for the project, or it could be, well, here's somebody that doesn't meet the guidelines that we've established for being a tenant, but here's their criteria. Maybe it would be a good idea to rent to them. Well, because it's outside of the criteria, everybody that's involved gets a chance to vote. Right? So that's called governance, which is not something that exists in traditional finance. Right? In traditional finance, nobody gets to vote on it except for a board that sits at the financial institution. But here, the actual investors get to decide and vote. That's called governance. And there's a concept, which I'll talk about next, in the token space, or crypto space, which is called burning of tokens, okay, which is whereby you reduce your supply of tokens so that you can increase the value of the existing supply, right? If you have, for example, 800 million tokens, and you're constantly reducing those, then the value of the existing tokens will continue to go up, right? Because the supply is reduced. Basically, supply and demand concept. So, effectively, what you're doing is controlling not just the liquidity, but the actual value. So you can keep the value of the investments from decreasing too much. Right? It's a way of stabilizing value. So we've got the burning of tokens built into our smart contract, our ERC20 Ethereum smart contract. So as dividends are paid out, tokens are burned, which increases the value of the existing tokens. Does that make sense? This is all based upon a pretty intense mathematical formula. The news for us is that the ERC20 Ethereum smart contracts pretty much do that for us, along with some bright quantitative mathematic people that we have that are able to figure out these formulas.